Hello, my name is Clinton Watkins. I'm a professor and the director of the Global Business Program at Akita International University. Today, I would like to give you an introduction to financial literacy. So welcome to my open campus class. We'll talk about financial literacy. The contents of my talk are as follows. First, I will give you a brief self-introduction. Then let's talk about finance, then financial literacy. We'll do some quiz questions on finance and then discuss the answers to those quiz questions and finish off with a brief summary. So about me, I'm an Australian. I was born in Perth in Western Australia. My education was at the University of Western Australia, where I did an undergraduate degree in economics and 2 graduate degrees. In my career, I've mainly worked in business. I started off as a business manager in a number of different businesses in Australia. I then became an economist and worked on carbon emissions and international development assistance. Later, I moved to the Reserve Bank of New Zealand in Wellington, New Zealand, where I worked in the Financial Markets Department. After that, I moved to Tokyo to work for Barclays Global Investors and later BlackRock Japan. There I was a hedge fund researcher and strategist. And after that, I started working in universities in Kobe University and Akita International University. On the left side of the screen, you can see my recent research papers. These are about commodity market research and stock markets. My courses that I teach at Akita International University include finance theory and applications, portfolio management, behavioral finance, finance data workshop, the capstone seminar, and crossing borders without crossing borders. So let's talk about finance. What is finance? Most people would answer this question by saying that finance is something to do with money. Maybe it's about managing money. So let's think first, what is money and what's the purpose of money? Well, it's a medium of exchange. It allows us to exchange goods and services, to buy or sell goods and services. It's a standard of deferred payment. That means we can pay a bill later using money. We can pay for a good or a service later with money. It's a store of wealth, so if we accumulate some wealth, we can hold that in money. And it's a measure of value. We can value goods and services using money. But what are the reasons that people use money? What's behind the use of money? Well, almost always what is behind it is real goods and services, resources. So here we have a nice definition of finance theory from Farmer and Miller. And they say the theory of finance is concerned with how individuals and firms allocate resources through time. And that's the key sentence here. For example, say you are now 25 years old, you've just graduated from Akita International University and you've got a good job and you're starting to earn your own salary and you'd like to buy a house. Unfortunately, you don't have a lot of savings, so you don't have enough money to buy a house. You don't have the wealth to buy a house right now. So what can you do? You can use finance to allocate your resources through time. You can go to a bank now, take out a loan, use that loan to buy a house, and then you will pay off that loan for the next 10, 15, or 20 years with the income you're earning over that time. So what you've done is you've allocated your resources through time. You've said, okay, I would like to buy a house now, and I will use my earnings from the future to do that. So that's really a key element of finance. In doing so, we use capital markets stock market, bond market, any kind of financial market that facilitates us to exchange resources through time. And firms as well. We can think of firms as, or companies as, a way that we can also allocate our resources through time. For example, if you are earning your salary and you want to save some money and invest that and grow your investment over time so that you can use that to buy something at a later time, you could use your money to invest in some stocks of firms, and hopefully over time the value of those stocks will grow, and at a later time you could sell those stocks and use that money to buy something at that time. So let's just talk a little bit about the finance discipline. There are three broad areas of finance. One is investment and financial markets, and that's largely where I've worked in my professional career. The second area is corporate finance, and that deals with how companies make financial decisions. And the third area is financial institutions, and here we're talking about how banks operate, for example. There are many subfields or sub-disciplines in finance. Some that I've worked in include asset pricing, behavioral finance, market microstructure, etc. So there are many different areas of study within finance. I do research now in corporate finance, for example, and corporate financial structure and governance. There are two broad approaches to finance, or using financial knowledge and financial theories. One is that of the scientist. The scientist wants to understand how the financial world works, and that is why the scientist will study finance theories. The engineer wants to use finance theories to make decisions. So somebody in a company or in government may want to use financial theories in order to make financial decisions. There are a large variety of careers in finance. I've worked in asset management, central banking, hedge funds, and alpha generation, largely. But there are many areas, including various types of banking, commercial, retail banking, investment banking. People work in generating news and information in the finance industry, and providing data. People work with technology, and in particular now fintech companies, of course, are very popular. There are other areas such as insurance, real estate, and so on. So there are many different careers that people follow using finance knowledge. Okay, so next, what is financial literacy and why is it important? Let's go through a definition first of financial literacy. So financial literacy describes the skills, knowledge, and tools that equip people to make individual financial decisions and actions to attain their goals. This may also be known as financial capability, especially when paired with access to financial products and services. So financial literacy is really just our ability, our skills and knowledge in order to make financial transactions. Financial education is the process by which people gain information, skills, and confidence and motivation to act in terms of making financial decisions. So where can you gain financial education? In the classroom, by seeing an expert and having some coaching. You can learn online, you can learn using self-study. And finally, a key desired outcome for financial education is sustained financial well-being. So financial well-being is the circumstance where we can meet any of the payments we need to make in our life, we can pay our bills, and we can feel financially secure, and we are able to have enough money to enjoy a good life. Okay, let's go through some quiz questions. So I want you to answer these questions. When we go through the questions, please write down your answer on a piece of paper in front of you, and then we'll go through the answers. Okay, so question 1. Suppose you have 10,000 yen, or ichiman, in a savings account earning 2% interest per year. After 5 years, how much money would you have? So option A is more than 10,200 yen. Option B is exactly 10,200 yen. Option C is less than 10,200 yen. And option D is you don't know. Okay, so please make a choice. I'll give you a few moments to think about it. So please choose A, B, C, or D. And let's go on to question number 2. When an investor spreads his or her money among many different stocks rather than owning just one stock, the risk of losing money, A, is higher, B, is lower, C, is the same, or D, don't know. So please choose A, B, C, or D and write that down. I'll give you a few moments to think about it. Okay, let's go on to question number 3. Which of the following statements is correct? If somebody buys a bond issued by firm B, A, he or she owns part of firm B. Option B, he or she has lent money to firm B. Option C, he or she is liable for firm B's debts. That means that the person needs to pay the debts of the firm. Option D, none of the above. And option E, don't know. Okay, so please choose A, B, C, D, or E. I'll give you a few moments to think about it. Okay, let's go to question number 4. Before I buy something, I carefully consider whether I can afford it. Okay, so this is a statement. I want you to decide whether A, you strongly disagree with this statement, or you disagree, or C, you neither disagree nor agree, D, you agree with it, or E, you strongly agree with it. So does this statement feel like you? Before I buy something, I carefully consider whether I can afford it. So please choose A, B, C, D, or E. I'll give you a few moments to think about it again. Okay, let's go on to the last question, question 5. Here we have another statement that I want you to think about. I find it more satisfying to spend money than to save it for the long term. So, how do you feel about that statement? Do you strongly agree with it? Strongly disagree with it? That's option A. Option B would be just disagree. Option C would be neither disagree nor agree. Option D, you agree with it. Or option E, you strongly agree with it. So that I'll read the statement again. I find it more satisfying to spend money than to save it for the long term. So please choose A, B, C, D, or E, depending on how you feel about this statement. Okay, let's move on and discuss the questions and concepts behind these questions. So first, let's just think about these questions. What are they asking you? Well, the first three questions are about your financial knowledge, your understanding of financial concepts and calculations. That was questions 1, 2, and 3. Question 4 is about financial behavior. So this is about how people react when they make financial decisions. And question 5 was about financial attitude. What is people's outlook on financial issues, or how do people feel about financial issues? So question 1, let's go through the answer to question 1. So the question again, suppose you have 10,000 yen in a savings account earning 2% interest per year. After 5 years, how much would you have? This question is about compound interest, and this is the idea that each year you will earn interest on interest you received in previous years. So in year 1 you receive 2% interest, and in year 2 you receive interest on 10,000 yen and your 2% interest, and so on. So each year your interest compounds. You earn interest on the interest that you got in the previous year. Thus, your total savings for 5 years can be shown here. It's 10,000 yen times 1.02 times 1.02 times 1.02 times 1.02 times 1.02. Or we can simplify that to 10,000 times 1.02 to the power of 5. And what is the exact answer for that? 11,041 yen. So you will earn more than 10,200 yen in 5 years. So A is the correct answer. Question 2. When an investor spreads his or her money among many different stocks rather than owning just one stock, the risk of losing money is? Well, the choices were higher, lower, the same, or don't know. This question illustrates diversification. Spreading your money among several different stocks lowers your risk. And it's the idea of a saying, at least that's popular in English: don't put all your eggs in one basket, because if you drop the basket, you'll break all of your eggs. So you should spread your eggs around so that if there's an accident or a problem, you don't lose all your eggs, just 1 or 2. So the idea of this is that it's better to have a small exposure to many different risks than a large exposure to just one risk. And this work sort of came, or this concept came from the work of Harry Markowitz, who won the 1990 Nobel Prize in Economic Scientists. He worked on portfolio theory and diversification. So here the answer is B, lower. Question 3. Which of the following statements is correct? If somebody buys a bond issued by firm B, he or she owns part of firm B, he or she has lent money to firm B, he or she is liable for the firm B's assets, none of the above, or don't know. Well, what is a bond? A bond is a loan. It's a securitized loan, and by the term securitized, what we mean is that if you buy a bond from a company, you can easily sell that bond to some other investor if you want to sell it. You don't have to keep it. You can sell it to somebody else. So that's what securitized means. So a bond is a securitized loan. It represents a loan to firm B. So in this case, the answer is B. He or she has lent money to firm B. So out of questions 1 to 3, how many did you get correct? 1, 2, or 3? This gives you a small measure of your financial literacy with respect to knowledge about finance. Question 4. This question is about your financial behavior, so it has no correct or incorrect answer, but we can still learn something about your financial behavior from how you answered. So the question is, before I buy something, I carefully consider whether I can afford it. So if you agree with this, you are carefully considering what you should buy and whether you can afford it. If you disagree, you don't think it's so important to carefully consider whether you can afford it. The question is trying to measure your financial behavior, that is, how skillfully a person can use their financial knowledge to maintain their financial well-being. So although there is no correct or incorrect answer, a person who more carefully considers whether they can afford purchasing something will be able to conserve their financial resources better. So if you agree with this statement, then you are more likely to be able to manage your financial well-being. And question 5. This question is a question about financial attitude. That is, how important it is to you to make financial decisions that secure your long-term financial well-being. Is this important to you or not important to you? Here it's a measure of, this question is a measure of attitude, financial attitude, so there's no correct or incorrect answer. However, if you disagree with this, then what you are saying is that you are more concerned about the long term and your financial well-being over the long term, if you disagree with this statement. If you agree with this statement, your attitude is more that you would rather spend the money now and worry about the future in the future. So again here, if people place higher importance on short-term wants over long-term security, they're less likely to save for the future and make long-term financial plans. But if they place higher importance on long-term security and less importance on short-term wants, they're going to be more likely to save for the future and make long-term financial plans. So this is a measure of your attitude. Okay, so how did you go with those questions? I hope those questions helped you understand a little bit about the ideas of financial literacy. So what did we do? We have defined finance, and we've looked at different financial specialties and fields and careers. We've defined financial literacy, financial education, and financial well-being. We've learned how financial knowledge, behavior, and attitude can be measured by using survey questions like we just did. And we covered 3 concepts in finance: compound interest, diversification, and what owning a company's bond means. You have also, by doing these questions, made a small assessment of your own financial literacy. So I'm hoping that will help you think about finance in the future, think about your own personal finances in the future. So thank you very much for your attention. I'm really glad that you've listened to my talk until the end. If you have any questions about studying at AIU, or about the business program at AIU, or about finance, then please send me an email. You can contact me on my website by using the URL that's on the screen here. You can fill in the contact form and send me an email, and I'll reply to you. So feel free to ask me any questions you might have, and thank you very much for your attention, and I hope to see you again.